If you're thinking about buying a property here in Tenerife and using a mortgage, you'll be interested in this interview I had with Bozena. She works for Mortgage Direct. It's a Spanish-based company, but it's run by English-speaking people. They speak other languages as well, but you'll be interested to know that they deal with all of the Spanish banks, but they tailor-make each deal to your criteria. So they will do all the advice, they'll do all the work for it, and in the interview she explains about the costs, the process, the types of banks they're using as well. So let's dive in.
The name of your company is Mortgage Direct. So how long has that been going then?
It started in 2006 in Valencia. It was started by Kevin and Catherine Monger, and we've been operating ever since.
All right then, okay. So, right, so if, for example, if someone wants a mortgage, what do they actually need to provide to you guys to get underwritten?
Well, the way we work to start with, we ask the clients to complete affordability check, which is not an application to the bank, it's just giving us the information that we need to calculate the affordability. So we ask for things like date of birth, whether they're employed or self-employed, how much they want to borrow, what term, the income, the expenditure, whether they have any properties, any mortgages, and based on that information we then calculate the debt to income ratio, and then we produce them a quote. If there is a problem, we tell them what the problem, how to fix the problem, and we then match them with the correct bank. But to start with, we just need that affordability check.
Okay, and does that cost them anything at all?
No, the initial advice is free. So the affordability checks, the calculation, trying to find the solution, talking to a number of banks, producing the quotes, all of that is free. It's only at the point where clients decide, yes, I want to go with this quote, I want to use your services, this is where we'll start charging.
Right. So how much normally then can a borrower borrow as like a loan to value amount?
It depending on the circumstances, it's very complex. The general rule is if you're buying, if your income is not in euros, at the moment you can borrow 70% if the mortgage is over 100,000, or 60% if your income is not in euros and the loan is below 100,000.
Right, okay. So really, so for any British buyers, then they're only really going to borrow 60% then?
Unless the mortgage is above 100,000, there is a bank that still offers 70% mortgages for any clients whose income is not in euros, but they have minimum lending, minimum loan amount 100,000. They will consider something close, so let's say 96, 98, if they like property and location, but they don't do mainly 100,000 plus, but they will still do the 70%.
And we should just clarify that is what I know you've already said it, but we should just clarify that is loan amount, not just the value of the property. What's the term, maximum term? And I guess again it's all different because it depends which bank you go with. But is there an average term, like you can't borrow up to more than 70 years old, 75 years old, something like that?
The terms are, like you said, depending on the bank. On general, the minimum term is 10 years. They won't do anything lower than 10 years. The maximum term usually is 25 years, but you can have the mortgages up to 30 years with some of the banks. Maximum age by which the mortgage is to be repaid is age 75. However, there is one bank that will go up to the age of 80 if we can demonstrate that the client is receiving good pensionable income to support the mortgage.
Right, okay. So just a quick question then. If I'm 60 and I'm still working, and I'm going to have it say 15 years, so until I'm 75, but I might stop working at 70, what do I need to give you guys to prove that for the last 5 years, while I'm on a pension, but I don't know what the pension is, how do I prove that?
At the time, if you're already working, so at the time, the bank looks at the application at the time of application. So if you say you're going to be working up to an age of 75, they don't need any additional information. Usually the banks, very rarely the bank will request additional documents with regards to pension because they know, or if they don't know, they ask us the state pension. And usually by the time you get to the pension age, your mortgage is much lower anyway.
Right, of course, because you've paid it off, paid some off.
Yeah.
Okay. So there's no interest-only mortgages like we used to have in the UK?
No interest only, and there is no buy-to-let mortgages. So, you can still purchase the property, you can rent it out. The bank doesn't make any difference between, whether it's for your own use, holiday use, or rental. As long as you keep the repayments, it makes no difference to them.
Okay. And a lot of questions I get asked about rates. So is there an average rate at the moment? An average rate, I know it's difficult to say, but an average rate for an average type mortgage?
Okay, well, this is rates are again complicated. Nothing is simple with Spanish banks, but the rates, if the clients have a very good financial profile, so very low debt to income ratios, good loan amount, they like the house, they like the location, the banks usually are willing to drop the prices because they want the business.
Right.
On average, at the moment, the rates are, let's say, you can get 20-year fix at 2.5%, and that's fixed for the 20 years.
Right.
The variable rate is round about Euribor plus 1.9%. That's the averages. Of course, it was cheaper. And also, it's worth adding that if you are willing to take banks' products, because they will try to sell you a pension, life cover, home insurance, house alarm, the more products you take from the bank, the cheaper the interest rate. But that might not be a cheapest mortgage overall.
Okay. And we spoke earlier about any costs for doing the first sort of check, but as an average mortgage, if I'm borrowing let's say 100,000, what are my fees likely to be with you guys and with the bank?
So we charge, once we produce the quote, we do the calculation, we know we issue a mortgage, we charge €495 with the application. This fee is covered under money back guarantee, which means if I make a mistake with my calculations and I'm not unable to get a mortgage, the fee is fully refunded, no question asked. Once we submit the application to the bank with all the documents and the mortgage is approved by the risk department, we charge €1,000 and we look after the clients until the completion date.
Right, okay. And I suppose, this video will last a long time, for the duration of my website sort of thing, but we're in the struggles of COVID-19 at the moment. So are the banks looking any differently at the minute about mortgages?
All the banks are still working. The banks are working, the risk departments are working, so everything is operational. However, it takes time. As before, you could get mortgage pre-approved within 2 weeks. Now I would be worried to say to a client it's going to be 2 weeks, more like 3 weeks, just in case there is a problem. Yeah. The criteria, they've not changed the criteria as such. What they're starting to look at is what profession, what business you do and what profession you are in. And they're starting to analyze whether your business or your profession could be affected by COVID.
Right, okay. Interesting. It makes sense, I suppose.
Yes, especially where there is a joint application and both applicants have jobs that can potentially be affected by COVID. They will still lend, but not necessarily the full mortgage amount, so not necessarily the 60 or 70%, or they might want to extend the term. So, we, in cases like this, we cannot negotiate the rates with the banks because they take into account what you're doing at the moment. Other than that, everything else is the same. The only problem we are having at the moment is if clients finds the property, wants to buy it, is the valuation. Because it depending whether the property is empty or not. If the property is not empty and there are somebody is living in the property, they might not accept the visit.
Right, because of the potential risk of passing on the germs. Right, okay, all right. So that's just a thing for the moment, though, not forever, as we've been talking about mortgages in general. So do you think there's anything that I should have asked you, Bozena, that I haven't asked you already?
Yes, perhaps we can, this is something I come across quite frequently. It's type of income that is acceptable. And the criteria for employment, self-employment. We come across this quite a lot, and for employed people, what the banks are looking for is the permanent contract, not on a probationary period, contract without the expiry date. they would preferably like to see minimum 12 months employment. For the self-employed, they want to see 1 year worth of self-assessment, company accounts, whatever that is. A lot of my clients assure that if they are directors of a limited company and they are employed by their own company, if they give themselves a pay rise, they can just produce the payslip to the bank, and the bank will take into account the payslips rather than the overall 12 months or 2 years. Some banks will look at the last 2 years and take the average. Some banks will look at the last 12 months, but that's the minimum.
Well, it's been very interesting anyway. It's opened my eyes up a bit.
So thanks very much, Bozena. So if you want any more information about mortgages, then you can get in contact with me and I can put you in contact with the guys there, or you can click one of the links down here in the article and that'll take you straight through to their website.